There's a newer ETF making serious noise in the S&P 500 income world, and it's not JEPI and it's not SPYI. It's something different, and it only turned 1 year old recently. It's called TSPY, the TappAlpha SPY Growth and Daily Income ETF, and this thing has quietly outperformed every other income ETF tracking the S&P 500 this year. We're talking better returns than SPYI, JEPI, GPIX, SPYT, and even the high-flying XDTE. So, naturally, people are asking, is this the one? Is it finally time to go all in on TSPY and ditch the rest? Well, that's what we're breaking down today. Performance, yield, strategy, risk, all of that. Because while the numbers look incredible, there's more going on under the hood than most investors probably realize. But before we jump in, as always, this is never investing advice. I am not a financial advisor. I'm not your financial advisor. This is for education and inspiration purposes only. Always, always, always do your own research and talk to your financial advisor before making any investment decisions. Cool. Welcome back. All Rico here. I just wanted to change the pace. You can see another part of my house. Instead of seeing the office all the time, I wanted to get out of the office so I don't feel like I'm trapped all the time. So hopefully you like it. I'm probably going to shoot around the house more often. So that being said, now I love me some S&P 500 stocks, but not as much as I love the NASDAQ, as you all know. But I know diversity is important and so is stability. Tech can have that explosive growth, but when it falls pretty hard. You can even see my old stomping grounds of Netflix. They beat all the numbers, but a tax bill from Brazil saw the stock fall 12%. And that shows you how volatile the NASDAQ can be. So today, look into some of the biggest cover call players when it comes to the S&P 500. Okay, first, we're going to start with the numbers. Here's the S&P 500 ETF showdown, and these numbers are all as of late October 2025, the date of recording. And I pulled all this data from Snowball Analytics, affiliate link in the description below if you're interested in a free trial and testing it out. So first, we have TSPY, the TappAlpha SPY Growth and Daily Income ETF, which launched in August of last year of 2024. The current price of the date of recording is $25.96. Year-to-date performance so far in total return is over 15%. The trailing 12-month distribution yield is about 13% with a 0.77 expense ratio. And it uses daily 0DT options for steady income and growth potential, and they distribute monthly. Next, we got GPIX, Goldman Sachs S&P 500 Core Premium Income ETF. Its current price is $53.13. It had a year-to-date performance of over 14%. The distribution yield is around 7.8%, an expense ratio of 0.29%, and their focus is on balanced income and growth with a more conservative options overlay, which why it has a lower yield, which is the lowest yield on this list, besides JEPI. All right, next up we have SPYT, which is the Defiance Title Trust S&P 500 ETF. Current price of the data recording is $18.54, with the total performance so far of 11.5% total return and a 20.45 distribution yield. Expense ratio is 0.94, so it's on the more expensive side. And this is probably the most aggressive when it comes to income strategy. It has higher volatility, higher risk, but it has the highest distribution and income. Next up, we have SPYI, the NEOS S&P 500 High Income ETF, currently $52.85 with a total return so far of over 14%, distribution yield of 11.6%, and a 0.68 expense ratio. So this is the smart, tax-efficient cover call strategy. It's strong balance of income and growth, and one of my personal favorites. And then next up we have JEPI, which is JP Morgan Equity Premium Income ETF, which is trading at $57.52. It's had a total return this year of 6%, and the distribution yield is around 8%. This has the lowest expense ratio, which is at 0.35%, and this is the classic income ETF. The reliable, but it's actually lagged everyone else on this list this year. And finally, we have XDTE, which is the Roundhill S&P 500 Zero DTE Covered Call ETF, currently trading at $44.46. Total return so far of 9% and a distribution yield of 27.76%, 0.95% expense ratio. And this is the extreme Zero DTE Covered Call approach. Super high yield, super high risk. And just for context too, this is the only weekly player on this list. Everyone else on this list pays monthly. So now just look at that lineup. And surprisingly, TSPY is sitting at the top of that list when it comes to total return. It's the leader across the board. It's outpacing SPYI and GPIX, which are known for being the most balanced blends of growth and income, which just actually surprised me when I did this. So think about that for a second. In a full field of income ETFs built around the S&P 500, where the usual winners are SPYI and GPIX, this youngster with the newer strategy is suddenly beating them all. So that's crazy. Again, like I didn't expect it to outperform this much, but let's dive a little deeper. Now, all of these track and mirror the S&P 500, but the way they generate income is what separates them all. So JEPI is your traditional monthly covered call ETF. SPYI and GPIX, they use index options and future overlays to capture much smoother and reliable income. XDTE and SPYT are the adrenaline junkies. These are the ones that are playing in the zero DTE or zero data expiration space, where they're writing daily calls. And TSPY, it's actually combining growth and daily income using the same zero DTE style, but with some fintech automation and active management behind it. So we'll talk a little bit more about this. So yes, TSPY right now, it's winning the total return battle, but the big question is whether that crown can continue to last. I think that's what you're all here for, right? So let's start to talk about it. Let's go a little bit deeper into TSPY. So TSPY describes itself as a fintech powered ETF. And let's talk a little bit more about what that means. So like we said earlier, it writes zero DTE call options every single trading day. Options that expire that same afternoon. That lets it harvest daily time decay, also known as theta, without holding open exposure overnight. So basically, it's like selling a tiny slice of insurance on the S&P 500 every day. Then you collect the small premium and then it resets every day. So you're doing this every single day. And the benefit here, it creates steady daily potential income and limits prolonged risk. Remember I said potential income. So the drawback here is you're giving up a lot of your upside if the market keeps running higher, because those daily calls, they cap how far the fund can go. So if it goes up $10 that day, you already wrote the call, so you likely won't realize that full $10 appreciation. So let's look at the numbers again for TSPY. As of late October, the market price is around $25.96, roughly around 14% distribution rate, and that 0.77% management fee. And right now, it has a total assets under management of over 114 million. And that's a pretty quick rise for such a young ETF, which shows that investors are hunting for income plus growth in one place. This has gained some popularity. But let's do an even deeper dive and see how they stack up. So looking at the S&P 500 players, let's see if I should or you should jump into TSPY right now. So looking at JEPI, this is old reliable. Like we said earlier, it's slow, steady, consistent. But in 2025, it's lagging terribly behind everyone else. Only about 6% year-to-date growth and an 8% yield. And I used to hold JEPI as one of my core positions. But once Niels released SPYI, that was it for me. I switched and I really haven't looked back. Now SPYI, like I just said, this is one of my favorites. It's the perfect blend of growth and income. It doesn't overtrade. It's tax efficient and it's delivered 14% year-to-date total return with that 11.6% yield. So for me, SPYI remains a core long-term hold, but we'll talk about what that might mean later. Okay, next again, we have GPIX from Goldman Sachs. It's kind of the stealth player in this game. It's not super flashy, but it did deliver 14.5% total return so far, and it has almost an 8% yield with super low fees. So if you like balance and simplicity, GPIX might be a hidden gem for you. This for me should be people's one-to-one replacement for JEPI. If you're just looking to get out of JEPI, you want better performance, this is the one I'd go to. Not advice, just sharing a perspective. SPYT, this one's more aggressive. It's over that 20% yield, but it definitely underperforms TSPY on total return. Like I said earlier, it's high income, but also high volatility. And then XDTE, the wild child, the weekly payer, it aims for those same daily option premiums, but it got hit hard early in 2025. Even with a 27% yield, its returns haven't recovered. I tried it, I didn't love it, moved on. So there's that. And that brings us back to TSPY, the youngster that somehow threaded the needle, high yield, strong growth. Let's talk a little bit more about it. The $1 million question, should you go all in TSPY? Let's break it down, look at some pros and cons. So the pros, it's performed the best year to date. And it's literally beating every other S&P 500 income ETF right now, at least the ones on this list. It has a strong yield. It's over 13% while still delivering capital growth. That's pretty rare. It has the fintech driven automation. So the daily zero TTE execution could make income more consistent than manual strategies. There's reduced time risk. So by closing positions daily, it avoids overnight swings in the S&P. And then momentum. Assets are growing fast, showing that income investors are paying attention and they are allocating at least some of their portfolio to TSPY. Now let's talk about some of those cons. We talked about it earlier, capped upside. You don't get to ride the big S&P 500 rallies because those daily calls limit your gains. It has a short track record. It's newer. One bad month of zero TTE volatility could flip performance. And we can look at maybe XDTE as a window window on what could happen. There's a liquidity risk. So 0DTE options volume is massive, but can dry up during sell-offs. Also, there's tax complexity. Daily option premiums might create short-term gains instead of qualified dividends. And of course, there's the execution risks. One small timing error each day can compound fast over time. Trust me, I've learned this. I used to do everything, trade all my trades right when I wake up. I don't do that anymore. I try to give the markets a little bit more time to show me what's going on that day. And that can be a downside for 0DTEs. So what's my take? I'm not ready to go all in on TSPY, at least not yet. As tempting as it is to chase the leaderboard on this list, this strategy still feels very experimental, especially with the fintech perspective. Daily 0DTE income is innovative, but it also potentially can be fragile if volatility spikes or option premiums dry up. So my core remains SPYI because it's been battle tested, it's steady, and it's managed by neos with the track record that I trust. And if anything, I've actually added GPIX as a complement. It's simple, smart, predictable, and it's performed way better than JEPI. But TSPY, it's probably a satellite play for me right now, not a core position. I'll keep watching how it handles the next pullback before I make any big moves. So I'm not actually allocating anything into it. And if I do, it'll be a small percentage. So now I want to hear from you. What do you think about these S&P 500 covered call ETFs? Are you team JEPI, team SPYI, or are you ready to go all in on TSPY? Drop your thoughts in the comments down below. What's in your portfolio and what are you thinking of adding or maybe even getting rid of after watching this video? Let's definitely keep the conversation going. Keep it kind. I love hearing from you all. Maybe you'll teach me a thing or two. As always, thanks for watching. If you got value out of this, please give it a thumbs up and subscribe if you haven't already. I really appreciate all of you. If it doesn't challenge you, it doesn't change you. Messy action's better than no action. Take care and I'll see you next time. Boom. Hope you enjoyed the kitchen view.